All right, welcome back to another episode of Asset Coach and Tax Strategist, and this is our second part to this three-part series. So I appreciate you being here. If you're watching this, then you're a subscriber. Thank you for being a subscriber. But if you're a new subscriber or new to the channel, subscribe. We drop episodes every Thursday. Like I said, this is part two. So after you're done with part two, feel free to join us and watch part one of this three-part series. Now, what are we going to talk about today? Well, let's do a quick little summary of what we talked about last episode. America's reshoring the trade deficit. So what's this trade deficit look like in products that could be reshored? What's being manufactured off-site in other countries? So let's go to visualizing the reshoring of things. So let's see, Made in America is back. All right, so let's take a look at this and see what this means. And again, we were talking about the trade deficit where we have these deficits in different areas. And I just gave my opinion as we were talking about the trade deficits. On this, what things that I feel like can be reshored back, things that, I just gave my opinion basically. Okay. So the reshoring investments, let's talk back and look at this. And this is quite informative. Funding in reshoring mega projects is in the billions. Okay. So, let's see here. Okay, so we're looking at quarter one of 2023 and how it's changed to quarter four of 2024. Investing in reshoring offers a strategic long-term opportunity. So let's see here. Oops, sorry about that. Okay, so let's read what this says. Visualize reshoring investments in the US have surged to 1.7 trillion. And this is really due to tariffs. This is Trump's tariffs and negotiation and reciprocation tariffs and getting our allies and companies to manufacture back here in the States to create jobs. And as a reward, he's lowering tariffs and creating reciprocation deals. This is the way it should be. We've talked about this in previous episodes where the trade agreements were so unfair to you and I as citizens. Not only were we paying taxes, we were paying tariffs on these products. Yes, we were getting all these products, but then the US was we couldn't sell our products to these other countries because of the cost of the tariffs. People wouldn't buy them because of the cost of us giving stuff there. So a trade is where two parties agree, and we did agree, but it was unfairly. I think our politicians really weren't looking at our best interests as Americans, as taxpayers. And the funny thing about this whole process is that this is decade over decade over decade, administration over administration over administration, and it's like a boiling pot with a frog in it, right? You have a frog in the water. You drop a frog in hot water, it's going to jump out. But if you put a frog in cold water and you turn the heat up, it'll boil to death because it gets comfortable, it gets used to it. And I think that's what happened here. Reshoring was spurred by supply chain disruptions, but is rapidly gaining momentum as companies move production back home. Now, we saw this first stint in supply chain disruption in COVID. When we had this the pandemic, various people call it different things. Basically this hoax that we had. Now, I'm not saying that COVID as a flu, a sickness is not real. It is real. How we treated it, how we adjusted it, how we acted towards it, I think was extremely manufactured. But that's my own opinion. And so the funding of reshoring. So you could see how investments back into the U.S. has increased just over since quarter one of 2023. And you could look at second quarter, third quarter, fourth quarter, and then all of a sudden we get into the first, second, and fourth quarter of 2024 into 2025. This is significant from tech to pharmaceutical. We got Apple who's committed to 500 billion, OpenAI 500 billion. Eli Lilly 27 billion. There's so many, and I did an episode on this, breaking this down. And you can see these companies in the movements. So let's see here. X Stargate, 500 billion. Taiwan Semiconductors, 100 billion. Johnson and Johnson, 55. Hyundai, 6 billion, and more and more and more. And it's happening more and more. And this is fantastic. This is great for you and I as citizens, because as citizens, this helps people have more jobs here. Yes, AI is coming on board. AI is part of our lifestyle now. And just like when the internet came, there were certain jobs that were lost, and technology came, certain jobs were lost. The same thing is going to happen with AI. And so we have to innovate. We have to still be able to put ourselves in positions to where we can work and earn an income. We can't just sit down and lay on our backs and just expect everything to be given to us. We got to work for it. We got to earn stuff. And this is part of us being purposeful as human beings. We need a purpose. And so this is great that other countries and this current administration has gotten these other countries and U.S. companies to invest in America. We can only benefit. Now, will our goods and services be more expensive? Maybe. Maybe. But will it, when we don't have billions of dollars of our tax dollars going out the door to these other countries? Having these trade where we can actually trade our products and services and goods to other countries. So to be small-minded, short-minded and say, well, Bob, if I go buy a car, it's going to be double in price because, our workers cost more. But at the same time, what we're looking at is our tax cost going to be what it is? Can our tax costs go down? And this is part of what this administration is trying to do. Having tariffs as an additional revenue stream for the government takes the burden off you and I as taxpayers. Okay? Really, the middle class. Really, it's the middle class. That's what Trump's been going through with this whole Doge thing, and making sure our tax dollars are being invested in the right areas and not just being squandered, and finding all of this illegal activity and fraud that's been going on. That's you and I. We should be pissed. We should be pissed. But unlike certain types of groups of people, where when they get pissed, they burn things, they loot, they blow up things, they knock down statues, they spray paint, they vandalize. The common citizen gets pissed with their dollars and their actions, not by vandalizing actions, but by deciding on where they're going to put their funds. So that whole go woke, go broke type conversation and comment phrase is true, because we, the majority, basically say we don't agree. We're not going to burn down our cities. We're not going to blow stuff up. We're not going to spray paint. We're not going to create tent cities to block you out. We're not going to shoot people. We just, like adults, say we're not going to spend our money there. We're going to spend it over here. Sounds pretty reasonable to me. So will products get more expensive? Don't know. Don't know. They may. But at the end of the day, other areas of our life have gotten more expensive, including our tax and the cost of being taxed on everything. So maybe some changes will occur. Maybe they won't. I don't know. But I think our citizens, I think Americans have the right to work and make our products. And we have the right to buy our own products that our own citizens make and produce. My opinion. So anyways, thanks so much for subscribing. This was part 2. It was a short one, but that's okay. It's about the value of the content that's being presented. Let's go to episode 3, part 3. That's next week. If you're not a subscriber, hit subscribe so you can get notified when we drop our next episode next Thursday. Appreciate you being here. Thank you so much. Make it a great day.